So I'm in a different setting today, as you can probably see if you're watching this on YouTube. If you're listening to this on the podcast, audio-wise, you can watch the video to this on YouTube as well. And today I'm actually going to be having a conversation with someone who is in the property mortgage space, because I get a lot of questions from people, particularly first-time buyers, around whether or not, with everything that is coming down the track with housing prices, the property market, whether or not you should buy or wait. I can't promise that we're going to be able to answer the question completely today, but the conversation should give you some idea, some information so that you can make an informed decision of your own. And I'm actually in Sam's studio. Sam, thank you, mate.
It's not just my studio, but yeah, no, we are here in sunny Solihull today.
Indeed. So why don't you introduce yourself to the people?
Yeah, thanks, Pete. So my name's Sam, and I run a mortgage brokerage, to use the term that most people will understand. We help a lot of investors and developers primarily, but obviously first-time buyers, home movers as well. That company's called Grand Union Finance. We've been going for 2.5 years now, but I myself have been a qualified broker for, believe it or not, 16 years.
Wow. You don't look old enough to be in the business for 16 years.
Good. I feel it. But I've been lucky. I've been able to see a lot of ups, a lot of downs. You know, I got qualified just before the credit crunch.
Okay.
So
what, 2007, 2008?
Yeah.
Okay.
So it's a really nice comparison with what's kind of going on at the moment. Not a nice comparison. That's probably the wrong word, but you can see some similarities and differences.
Yeah.
And I guess we'll probably cover a little bit of that today.
Yeah. So how did you actually get started in the trade then?
Well, I actually turned up to the wrong interview. That's exactly what happened.
Did you?
That's not even a joke. I got called by, I was doing a job as a researcher for a finance company in the city when I first come out of university, and I had this call from a recruiter, as you do. I've got this trainee broker job that I think you'd be great for. Like, fantastic, that sounds good. So I did a load of research on stocks and shares, and you know how the stock market works and what stockbrokers do, and turned up to the interview, which, as it turned out, was a group interview. Didn't know that either. in a suit that I'm certain was a little bit too big for me. I looked awful, and there was 11 people in total, and I very quickly realised that what I was there for had nothing to do with the stock market or selling stocks or anything like that.
So did you just go to the wrong place, or did you go in, was it the right place but you entered the wrong room?
I went to exactly where I was meant to go. It just wasn't what I was led to believe it was going to be, basically. So I had to really think on my feet. Very quickly, I was like, okay, actually what they're talking about on this, you know, this presentation sounds pretty interesting. My dad's a builder, so I've always had an interest in property and that sort of stuff anyway. I was, you know, a typical student getting up and watching Homes Under the Hammer most days, you know what I mean? So actually when they started talking about it, I thought, I think this is a bit more me anyway. And when we got round to doing the sort of one-to-one element of the interview process, I was very, very open and honest and said, look, this is not what I was told it was going to be. So can maybe we split it in two, and I get to ask you a few questions about it, and then you can have a section to ask me questions about it. And clearly that struck a chord, and they thought, this guy can think of his on his feet. And out of the 11, I was the only person to get offered the job.
Well, that's a lesson right there, though, because you didn't just try to wing it. You were like, listen, guys, I don't know what's going on here, but I didn't quite prepare for this. Can we do it this way? It shows a little bit of ingenuity, really.
Yeah.
I'm thinking outside the box, like you said.
I like, I think, and this is maybe going off on a bit of a tangent, but I like solving problems, and I think that's what stood me in good stead in this particular job. And I think when you get used to solving problems, the speed element comes quite naturally as well. Yeah. So you can think on your feet a little bit more. So I think it's a good skill to have. And yeah, for whatever reason, I did all right that day. And that's how this all started. Everything that I'm now doing is all from the fact that I effectively went to a job interview that I didn't think I was meant to be going to.
You know what? Everyone that I speak to is like, I kind of fell into it. It was kind of a mistake. Like for me, it was like, you got to go. If you don't go, we're going to take your benefit. So just go to the interview. And I'm like, I'm never going to get a job. I owe these banks money. Like, come on. And then all of a sudden,
but we're in the same kind of thing insofar as we're both financial advisors. You know, your level's a little bit higher than mine, but No one stands up when they're a kid and they say, what do you want to be when you're older? And goes,
Financial advisor.
I really want to be a financial advisor. Like, that kid's going to get beaten up, aren't they, in the playground?
Yeah.
So no one does it. It's astronaut or footballer is the sort of the main ones.
Yeah.
Fireman, maybe. That's quite a cool one. But yeah, no one steps up and says, I want to be a financial advisor. So as a result, you are kind of, a lot of the time, you are going to kind of fall into these kind of things.
That's true. So how are you finding things at the moment in terms of property market? What's your view from like doing mortgages and working in the property space at the moment?
Do you know what? If you'd asked me even a couple of weeks ago, I would have said, you know, it's all right. We're lucky. We've got a really nice core group of clients that we get on very well. They trust us implicitly, and we do get a lot of new inquiries on a weekly and daily basis. So purely from a how our business is running point of view, it's fine. The big struggle at the moment is just the constant barrage of updates to rates, criteria, and that sort of stuff. And it makes our job difficult. And I guess what we're trying to do to the best of our ability is to say to our clients, look, we're doing everything we can to make sure this process is as smooth as it possibly can. However, the likelihood of this going from where we are now to completion without any bumps at all is highly unlikely at the moment, because underwriters, I think what it is because all these changes, underwriters are just second guessing themselves. Underwriters are getting confused. They're asking for more information so they can make a much better, more informed decision. They can't just go on there, well, actually, I know this criteria off the top of my head because we've been working off the same criteria for months and months or years and years potentially. It is changing, and so it's becoming more clunky. That's the way I'm kind of describing it. We've got cases at the moment that, you know, it's taking a little bit longer to try and find the right lender for clients because you're having to do that extra bit of due diligence that you wouldn't normally need to do. So it's taking that little bit longer. Then with the increased level of due diligence and stuff that lenders are doing, that usually means more documentation. So we're spending the time getting all that sorted out at the beginning, which a lot of clients are sort of rolling their eyes at, but it's a necessary evil, unfortunately. And then of course we get to the application stage, and as we say, you know, there's been times over the last couple of weeks where lenders have come back and said, "Oh no, we don't do that anymore." It's like, well, I spoke to you about it last week, and you said you did. Oh well, we've changed since then.
Yeah.
And it's, you know, it's crazy. So I think what I would say to people, whether you're a first-time buyer, whether you're an investor, whatever it might be, and you need mortgages at the moment, patience is key, because otherwise you're just going to get really frustrated.
So that's interesting then, because I have been saying that obviously the outlook is we're going to be in a recession, and what typically happens then is lenders will tighten the affordability criteria because they don't want to lend money to people with an increased probability of default. So what are you finding that's happening at the moment in that regard? Because they're not going to sit on their hands and be like, oh, let's just see what happens.
Do you know what? It's I think that there's lots of conflicting pressure at the moment, because you've got bodies like the FCA, which are all about responsible lending, and so they should. We're actually very lucky to have the FCA in this country. It's probably the most secure financial lending governing body anywhere in the world, and we should be very, very count ourselves lucky to have it. But they're obviously pushing that, you know, that agenda of make sure it's affordable, do your stress testing, all that kind of stuff. You've then got the government that are probably putting pressure on to say, we need lending. We need to lend because that's what's going to help our economy. And then we've got the banks themselves, because they, don't forget, most banks in this country do not lend their own money. They're borrowing it from somewhere else. They've got funding lines, and they have pressures there to lend it out.
Utilise the money,
And even last week, I was talking to one of the senior guys at one of the banks that we work with, and they said, look, you know, everyone knows there's going to be a smaller pie this year. So we still need to lend money out. We need to get that money out the door. We're losing money with it sitting there. So we have to get out the door, and we have to find mechanisms to do it. So you've got this massive conflict at the moment. You know, you talk about the residential side of the market. With rising interest rates, that puts a massive strain on affordability. What somebody could borrow from the same lender 6 months ago
is no
longer available.
That's
obviously having a massive impact on the housing market. We've seen, you know, a lot of reports to suggest that in various different areas, prices are starting to dip, and we're starting to see that. We did apparently have a national average increase slightly in January. I think there was a bit of a new year sort of a boom, if you like, but But I can't see that as a long-standing thing. I think it will continue to dip down over the course of this year. So yeah, it's just really, really hard. I think people just need to be really realistic. I hope that banks, brokers, anyone that's giving the advice to somebody of, this is what you can borrow, is doing it in a responsible way. I posted something recently just saying, it's up to us to be responsible as advisors to say, you could potentially borrow this amount, which might be 95% loan to value, because there are products available allowing you to do that.
Yeah.
But do you want to put yourself in that position where you've got so little equity?
Yeah.
I think that's massively dangerous. And in my humble opinion, I don't think 95% loan to value mortgages should exist.
It's funny you say that, because I did a live on YouTube yesterday, and someone asked me this same question, and I said, look, it's all very well and good. Like, for a first-time buyer, it's that avenue to get on the property ladder. And that's fine in low interest rate environments. But you need to think beyond the immediacy of, okay, I'm getting on the property ladder, and you might be razor thin on your affordability. Because I think what's happened and what is happening currently is a really great example of what not to do. So you'll probably know this. People have loaded up on debt, low interest, right? Interest rates have been so low. Then all of a sudden, we're going to have 1.4 million fixed rate mortgages come out of their fixed rates this year. And those things are going to be going from 1% to 4, 5, 6%. And all of a sudden, the affordability that was already razor thin, if you've not increased your income, if you haven't budgeted properly, if you've not paid down part of, overpaid your mortgage to make sure that you're borrowing less, all of a sudden, shock to the system. You can't afford the mortgage, you might be at risk of default, and this is all the stuff that we're talking about right now, right? And I think that's a really good point, because, 95% is going to get you on the property ladder, but what about the affordability long term?
Yeah.
And those conversations need to be had. Like, what happens in 3-4 years' time after your fixed rate ends and interest rates haven't come back down? Let's just assume that they've increased. So you need to plan for the worst case scenario.
Yeah, absolutely. Everything you just mentioned there is a massive, massive issue. I actually think that one of the big things when we look back on this year and maybe next year in the years to come, I think one of the big things that's actually going to come out of this, and this is maybe on a bit of a tangent, is I think our country's mental health is really going to take a massive hit this year, because we all know as human beings we're quite fragile actually, and all the pressures we've got, the cost of living crisis, which has been a big thing for a number of months now, which I can't see really changing in the near future. Then suddenly we're going to have this big mortgage crisis this year where, thousands, if not potentially millions of people are going to lose their home, or they're going to be forced to move. All these things, and I think as a country we're gonna take a big mental hit, and that's what we need to be concerned about. But I think there are things that people can start doing, now. The worst thing in the world in these situations is to just bury your head in the sand and hope it all goes away, because it won't. And sometimes you've got to make difficult decisions. I remember when I came out of university, my credit was terrible. I was in a lot of debt. I was very stressed out, probably bordering on depressed, to be quite honest with you, because I just thought, what am I going to do? I'm looking at how much money I'm earning every month, and it's barely covering my expenditure. So then I have to sit at home and do nothing for a month just to get through life. And you kind of start thinking, what's the point? When things like that happen, we've already talked about the FCA and all these kind of sort of governing bodies. They are there to help protect us. And, if you do have personal debt, you've got mortgage debt, you've got all these things, before things go wrong, you need to be picking up the phone, contacting these providers and making them aware of your financial situation. There is actually there's a policy in place whereby if you get in touch with some of these providers and you say, I can't afford it, there's a process in place. They'll do an affordability assessment with you. They'll look at your income there and your expenditure, and they'll work out a payment plan for you. And a lot of people will be listening to this going, yeah, but I don't want to get a payment plan. That's negative. Well, I'll tell you what, it's a lot worse than missing payments and defaulting
100%.
and being repossessed on your mortgage. Because all those kind of things happen, and it's a snowball effect. I've seen in the last couple of months, actually, a few clients that have come along with me to me saying, I need to remortgage or whatever. I've looked at their credit files and I'm saying, you've made some errors in the last couple of years. And that's having a massive, massive impact, because as we've already said, when lenders are tightening, What's one of the things they're going to be tightening
It
on?
may not have happened. It might not be an issue 2 years ago when interest rates were low and borrowing was booming. But now
It's massive.
it's going to be, it's going to have a huge impact.
So I think money management right now has got to be the top of people's agendas.
Yeah.
Make some spreadsheets, know what's coming in, know what's going out, understand your own personal financial situation. And when you do that, suddenly everything seems a little bit clearer. Not knowing what to do, not knowing what's going on, that's going to be the big cause of the anxiety that a lot of people are going to be feeling surrounding finances at the moment. And if you could alleviate that, it might not be that nice an outlook. It could look pretty bleak, but at least you know and you can plan. And I think that's what a lot of people need to do this year. Unfortunately, Pete, I don't think that many people are going to do it. And I think this is where the problem arises, is that they're going to be, lots of people that are going to lose their homes. There's going to be lots of people that do get into real financial distress. And we do have a bit of a blame culture in this country, don't we? So instantly all that will happen is, all these people that this is happening to,
they'll blame the MPs,
they'll blame
the government,
they'll blame the banks. And ultimately the responsibility is on them. And it's not nice to hear, but it's the truth.
It is the truth, and it is the reality that needs to be told. I mean, because look, I understand people's frustrations, but at the same time, I think that there is an expectance that the government's going to do everything for us. It's like, I'm lucky enough to have lived in different countries. Like, my parents are Nigerian. I stayed out there for 10 years. Trust me, you get into trouble, nobody's coming to save you. There is no benefit system. You're on your own. And I've seen that side of the coin. So I'm like, all the stuff that's here, it's a godsend. Like, it's free. Like, you're paying taxes. Well, you might have paid taxes to get onto the benefit system, but it's still free money. Like, you should be really, really thankful for what you actually have, because a lot of people don't have those things. And I think with this year, I certainly see huge struggles for a lot of people. Mental health, you're spot on, mate. Huge issues with mental health, because a lot of the stress that people experience when it comes to mental health is, how do they cover the essentials? The rent, the mortgage, the gas, the electric. We already know that's what people are feeling squeezed on before these interest rates start to actually kick in. And I guess that leads me on to the next question. What do you think is going to happen with interest rates this year? Because the forecast is the bank rate is going to go from 3.5% right now to 5.2% by Q4 2023. What do you think will happen with mortgages? I'm
actually hopeful that the base rate doesn't get up that high. I've heard varying different viewpoints, with the lowest probably being around just below sort of 4.5.
Okay.
If it's somewhere in between, I think we can probably cope with it. If it gets beyond 5, I do think we're going to struggle a little bit, because there's only so much the banks can do. As we said before, banks do want to lend the money out. We are seeing that over the last, let's say, 2 or 3 Bank of England base rate rises. I think we're going to get another one early Feb. Hopefully it will only be a small one. I actually think the last meeting was really significant and really flew under the radar. The fact that there were actually some of the Monetary Policy Committee members voted to not increase the base rate. That hasn't happened yet. That's the first time. So
I thought that was interesting though, because the inflation number came down, but I think personally that they made the move by 0.5% just to be seen to take action, because something had to be done. It will be interesting to see what the inflation number comes back out. But I was really interested.
I think maybe they're looking at it going, it is coming down, but actually we still need to continue on this path to try and increase that velocity. Because it actually needs to get down quite quickly. So because it went up quickly, we kind of need it to get back down as quick as we possibly can. I don't necessarily think it's a bad thing if it takes a little while. We've seen knee-jerk reaction stuff happens off the back of quick changes, and I think our market could do without that. But I think I could genuinely see the Bank of England not putting the base rate up in February. I think they will, but I wouldn't be surprised if they didn't, and I wouldn't be surprised if it was a little one, like a 0.1 or 0.2, something like that. My money would be on 0.25.
Okay.
I could see that happening, but then again, I wouldn't be surprised if it was 0.5 as well. So it's really tough at the moment. Beyond that, who knows? Maybe some smaller increments will come about. Maybe we will have a couple of months where we don't get an increase. The positive thing, I think, from a mortgage perspective is that over the last sort of 2 or 3 months of base rate rises, what we have seen is lenders still continuing to try and decrease their rates. But there's a reason why they're doing that. The rates are what allows them to lend, but either on an affordability basis from a residential point of view, or a rental calculator basis from a from an investment perspective, buy-to-let perspective. But then what they're doing is they're compensating in other ways. We're seeing fees go up.
Fees come up, yeah.
You know, the average fee on a buy-to-let for limited company right now has gone from 2 to 3%.
Okay.
So that's where the changes are happening. They're not. It's not like they're just getting us another way. They're creating mechanisms to lend.
Yeah.
Which is a positive thing.
Yeah.
Because if we have a market that's lending, then that is going to have a positive impact on the property market. The prices probably won't come down as greatly as we first saw. I truly believe that we actually are going to see less of a dip than a lot of people thought that we would, and that actually creates even more opportunity. And I've been talking for ages about the idea of commercial to residential conversion options this year. We're crying out for residential property still. There is still a supply and demand issue.
Yeah.
That's going to be fueled by the fact that there is still lending. We were saying a little while ago, I went through the credit crunch, and the big problem we had there was no money.
Yeah.
We don't have that issue this time.
Yeah.
There's a lot of money. There's a lot of liquidity in our market, which should hopefully fuel growth. Yeah. And that's a positive. So yeah, it's about finding those mechanisms to get that money out the door. And hopefully it's going to be a smaller market this year. Everyone knows that, but maybe it won't be as bad as first thought.
Yeah, I hope for the best with this, really, to be fair, because even on the residential side, my mortgage comes up in October, and I'm on a 1.49 fixed rate at the moment. So like shopping around, when I first did some shopping around in, I think it was December or so, it was like 4.5%. Then it came down to 4.44. Now it's 4.31. So I'm kind of like, do I bide my time to see if it comes down a little bit, or do I just bite the bullet right now? But I think, what would be your tips for first-time buyers right now? Do you think it's worthwhile waiting, or do you think it's worthwhile staying in touch with the market and seeing how things transpire and making a decision based on what happens at the time?
I think first and foremost, the big thing for me is really, really honestly think about how you're getting on the property market, because we mentioned this before. Getting on the property market, great, but you've got to stay there. Once you're on, you've got to stay there. And if you put yourself in a difficult situation, it could be all over, very, very quickly, and that's going to have repercussions for years to come. Right now, I'm saying if you're a first-time buyer and you do not have a 10% deposit, I really would advise against getting onto the property market, because all that's going to happen is you're putting yourself in a position that in a couple of years' time, potentially, if you have a 2-year fixed rate, for example, the price of your property may well have come down. And if you're on a 95% loan to value mortgage, you had 5% equity. Well, that's a really tiny little margin, and you're putting yourself in a really difficult situation. So first and foremost, deposit. The higher deposit you can put down right now, the better, because you are mitigating that risk of going into negative equity or going into a position where it's going to be harder to get that mortgage. Because don't forget, with every sort of percentage increment, like sort of bracket of the 5%ers as they go up on your loan to value, the cost of the money goes up as well. So the cost of a 95% loan to value mortgage from an interest perspective is higher than an 85%. So obviously that's going to make a massive difference as well. There are loads of things that you can do to try and make things more affordable for yourselves. But again, you've got to think about it. I'm getting a lot of clients at the moment going, okay, well, why don't we just increase the term of our mortgage to the maximum we possibly can do, 40-year terms, because when you're paying capital and interest together, the longer the term, the less you actually end up paying per month. But what people don't realise is you're paying so much more interest. So, I've spoken to a lot of sort of first-time buyers and sort of home movers recently who have reached out, and that's kind of the advice I'm giving is deposits. Think about that. Don't overstretch yourself. And look, it's not a very popular viewpoint, but no one in this country has a divine right to own property. It wasn't that long ago that about 17 people own property in this country. So it is a relatively new philosophy. And the only reason that people are able to buy property en masse right now is because of mortgages and the availability of borrowing. So we've got to remember that. Unfortunately, I don't think that the last probably 5 to 10 years of governments have helped that mindset by talking about, generation buy and all this sort of stuff. It's making people believe that owning a property somehow makes you a successful person. Not the case at all. And I really hope that there's a switch in mindset that renting a home is completely okay. It really is completely okay.
That right there is a definite conversation to be had. And I can think of a friend of mine, actually a neighbour. They bought this house, which they still paid a lot of money for this house, but it was kind of like a work in progress. And now they're like, we're spending so much money on this freaking property. Now mortgage rates are going up. It's like, we can't afford this now.
Yeah.
And literally, we had lunch 2-3 weeks ago, and they're like, I wish we just rented. Because now the financial burden and the stress that it's causing is just way beyond what they ever anticipated. And they've just had a kid as well. They've got a 2-year-old son.
When you're renting, look, there's an argument to be had that if you rent a property, then you're always at the mercy of the landlord. They could turn around at any point saying we're selling or whatever it might be. So there is that issue, and I've had that problem fairly recently. Within the last 5 years, I've had a situation where my landlord turned around and said, I'm doing a renovation. It's going to take me 6 months, so you've got to move out. And he literally gave us 1 month notice to do that, and that was very, very stressful. But on the whole, I think it represents a certain amount of freedom as well. At the moment, I think there's going to be a lot of change in a lot of people's lives over the next couple of years. So having that freedom to be able to say we actually need to move to a different area to get a better job, or we need to cut back because we're going to start a business. All that sort of stuff. And I think that renting affords you that freedom a little bit more. So actually, I think sometimes it's about thinking a little bit more four-dimensionally about things, and it's not just about, I really want to own my own home because then that makes me look good, or I don't want to rent because it doesn't make me look good. Who cares what other people think? You've got to look out for yourself, and you've got to make good decisions based on what you're going to have to do over the next couple of years. And I think a lot of people are going to have to really think about how their lives are going to change over the next couple of years, because it's going to affect a lot of people.
100%. I would definitely agree with that. I think in Europe, it's not the same. Like, they rent, they're happy to rent. And I think even from a financial planning point of view, this is where you can talk into, retirement planning and thinking about retirement and what your life is going to be like at that point. And obviously owning your own property gives you that asset that you can sell down and release some funds to supplement if you haven't paid into a pension, for example. I think a lot of this comes back to financial education and actually informing people of, right, if you don't buy property, what does that mean? Do you need to make other considerations for 20, 30 years down the line? There's a big, big gap for us to fill in the UK when it comes to that conversation, so people feel more comfortable about the choices that they make, and whether, like you, as you're saying, buying a property is actually the right thing or not. Because for some people, it may not be. For some others, it might be. And it's personal finance at the end of the day. You have to make a choice that is best for you, and not what your parents or your mum or your aunts and your friends say that you should do.
For me, I started on this kind of journey, if you like, of thinking about needing to understand money and finance a little bit more fairly recently. Bearing in mind I've been doing this job for 16 years, it probably was only about 7 or 8 years ago that I read Rich Dad Poor Dad, Robert Kiyosaki, and first heard the term financial literacy. I'd never come across it before. And I think that book was massive for me in terms of changing the way that I thought about money, and that we need to understand it a little bit better. And since then, when I've done lots of, I've researched successful people, what makes them tick. And one thing that I've certainly noticed is that those people that are financially very successful, the fundamental, the foundation of it is they just understand money better than most people do. But actually, they probably don't understand money that much more than most people do. They just understand it enough more. And it doesn't take a lot. And again, this could be a whole series of podcasts, let alone just one, talking about the changes that we probably need to make to our education system in that regard. But when you take a bit of a backward step on that and think about it in a wider capacity, and I mean this is a completely unanswerable question, if 10 years ago, off the back of the credit crunch, the education system in this country, the government's decided we need to be better at our kids need to understand money better, and that when people are more financially literate, they'll make better decisions, all that kind of stuff. How much better of a situation would most people be in
right
this
now.
Country right now?
Oh yeah, 100%.
So look, Rome wasn't built in a day. You've got to take the first step on these things, and I think the sooner we do it, the better, because we are going to have another recession at some point in the future. We are going to have more difficult times. We're going to get through this one, of course we are, but as the cycle goes round, we are going to have another one. And I think the more we are able to educate our younger generations about how to manage their own personal finances, the more clued up people are going to be. Look, you're always going to have those that are going to get into trouble no matter what. But the more people there are, the less of a burden on the whole country that we're going to see. And I think there is actually a real responsibility of our government to implement those kind of things. And I know there's quite a number of people out there in the kind of communities that we now are sort of part of that are getting off their own back and going into schools and doing after school talks and that kind of stuff. And, you know, entrepreneurs, business people are taking it upon themselves to do that. But really, it's the responsibility of the education system to be doing it, not, not businessmen and entrepreneurs to do it.
100%.
You know,
I completely and utterly agree with you on that one. And that's going to be the age-old battle. And one thing I keep saying to people is, this isn't the first time we've been here. Like, this is probably not going to be as bad as it was in 2007, 2008. Like, it was bad back then. Like, it was horrible. This is going to be a maybe more tepid kind of version of that. But the point is, what do we learn now? Because when this rolls around again in 10 years' time, what do we take from this instance to put ourselves in a better position then? And the education system has a lot it has a big role to play.
Yeah.
And who knows whether the government is ever going to come around to actually fixing it properly. I hope that they would. I mean, Rishi was talking about, making mathematics compulsory up until the age of 18. Well, what real good is that actually going to do?
Well, do you know what? A phrase I'm pretty sure I made this up, but I said it does dumbfound me a little bit. And you talk about him saying about maths, because it's perfect on this point. Why do we come out of school and know what Pythagoras' theorem is, but don't know how to open a bank account?
Yeah.
So do you know what? Yeah, maths, let's do it. But let's bring into maths real life maths. Pythagoras' theorem's great. Trigonometry, wonderful. Everyone's favorite subject, maths at school. But why don't we bring real world stuff into this?
Yeah.
Why don't we talk about the maths of finance?
Yeah.
How does compound interest work?
Interest rates, how does that all work?
That's still maths.
Rule of 32, how does that all of that, what's the real world translation of that? 100%.
This is what they should be doing.
And I had a conversation with Bobby Siegel. He's a mathematician. He's also a teacher, and we talked about the fact that teachers don't know this stuff. You can't teach what you don't know. So this is where you need intervention from the government to actually change the curriculum for meaningful change and a proper program that will equip kids properly coming out of schools. It's nuts. It's crazy that how can you not equip kids with the stuff that they need to know now?
But you know what? If you want a great, massive analogy of or example of how financially illiterate this country is, how many people win the lottery and go bankrupt a few years later, or and we've seen it recently, how many footballers stop playing
Jermaine
football?
Pennant, yeah. You know what the number is? 40% of them that retire end up being broke. 40%.
And it's because, look, we could probably have a whole thing about this particular scenario as well, about what advice do these guys actually get? And is it responsibility of the clubs to look at them?
The FA.
Yeah, exactly. Look after these guys that have given so much to the sport and given so much happiness to all the fans and all that kind of stuff. And ultimately, everyone goes, but they're getting paid big bucks. But how many of them do fall on hard times afterwards because they've got no idea how to do this? Yeah. And exactly. It was in the news recently about Jermaine Pennant. It's crazy that a player like that can go bankrupt. Yeah. Just if you or I had that money, that's not going to happen because we know what to do with it.
Yeah.
But we've had to learn that for ourselves.
Yeah, and the hard way as well. It's funny actually because Jermaine Pennant, so my agent actually knows his agent. I want to try and get him onto the podcast because he has been out talking about the fact that he has ADHD. And that has impacted how he's interacted with money and some of the decisions that he's made. But it's like, how can you forget that you had a house somewhere in Cheshire? Like, it's a house. How can you possibly forget that you had a house? It's crazy. And, Usain Bolt's in the news today. Millions missing from his investment account. Like, how does this thing happen?
I think the thing is that there's two big problems when it comes to money. There's not having enough and then there's having too much.
Yeah.
Because when you do have too much, it becomes much harder to manage. You do then rely on other people. And when that happens, you're always, unfortunately, setting yourself up to be targeted, particularly if you're someone like Usain Bolt, massive high profile. you know, you can get targeted like this. But again, it all comes back to, I guess it's a little bit like running a business. For me, that's a big thing I'm learning about at the moment. 2.5 years in, yeah, I know how to be a broker, but do I know how to lead a team?
Very different, yeah.
Do I know how to actually run the business?
Yeah.
What cash flow projections are?
Yeah.
I'm finding all this quite exciting at the moment, to be quite honest with you. But I'm a massive fan of you don't need to be an expert in absolutely everything, but you need to understand it enough to be able to call someone out on their bullshit.
Yeah.
And that's, I think, what people need to do. Yes, if you become wealthy and you are then relying on people to manage certain parts of your portfolio or your cash or whatever it might be, is just knowing enough about what they're doing to know whether they're doing it to a decent enough standard.
Yeah.
I would say a great example of someone that I think probably is on top of this kind of stuff is someone like Alan Sugar, who is a very astute business person, taught himself how to do that from a very early age. But if you read his book, one of the things that it's not really like a big theme. I don't even think he probably meant this, but you can actually see he did everything. When he was setting up Amstrad and all this kind of stuff, he was sitting with people that were doing the accounts and working it out for himself. He even was like sitting with the people that were manufacturing the goods, and he would know every single facet of the business. And I think that set him up to be, to create this individual to become as powerful as he has right now from a financial point of view. Because I think there's very few people that he could sit in front of that are managing certain aspects of his portfolio and could, do him over. Yeah. Because he knows enough. He's not the expert, but he knows enough. And I think that's what everyone should be thinking about right now is, do I know how savings accounts work? No, let's educate myself a little bit. Look, Google and YouTube are the greatest thing in the world. The YouTube University, as I call it, you can find it out. I did it the other day. I needed to find out how to get my Calendly account to integrate with MailChimp. I didn't know how to do that. So guess what I did? Went on YouTube and I found it within 30 seconds and 20 minutes later it was done. Yeah. So you can do that with absolutely everything. How do I pay down my mortgage quicker? How do I get rid of my debt quicker? How do I manage my personal finances? What money management tools should I be using? These are all questions you can just put straight into YouTube, and there will probably be a very clever person talking at a camera, telling you how to do these things. And it's just systematic. You just do it bit by bit by bit. And it might take you a month, but you do it and you then suddenly are much more in control of your accounts and your money and what's coming in, what's coming out. You were there when we were at Aaron's event, and I got everyone in the room to stand up to try and see how many of them actually could tell me to the nearest pound what their expenditure was in the previous month. One person in 250 people, Sarah, if you're listening, very well done, Sarah. She was the only one in the whole room. Yeah, that's crazy.
That's because we go about life and we just get caught up in just the normal day-to-day running of things, and we just don't pay attention to it. And I say to people you don't need to know everything, but the important things you need to know. Like, especially if it's impacting your mental health and your well-being, you're feeling stressed about stuff, you need to take a look at it. You need to know. Like, even if you don't know the number to the pound, you need to know, right, I've got 7 direct debits. These are the dates on which they go out. This is my bank balance. This is how much each of those payments are for. Do I have enough in my account to cover these 7? Yeah. That's the fundamental. Like, you have to know those little things. Because at the end of the day, the small things add up to much, much bigger problems if you don't look after the small things.
And you know what? Compartmentalizing it as well is so massively important. I thought I was quite anal with this stuff. And I can't remember who it was I was talking to recently. And when they went into the level of detail of how they automated and compartmentalized all their accounts, like, actually, this is really exciting for me. So what I do is, obviously I run my own business, so I pay myself, but I still do it as if I'm an employee. Yeah. And so I pay myself. I've got literally my old like Santander account I've had since I was like 8. It's still there. Money goes in there, but then guess what? It gets filtered into several other accounts that all have things that they're there for. Bills account, my joint account, a food account, a payment, like a social account, all this stuff. So you know that all your bills are going to get covered. You know that. You know that you're going to be putting money into savings. You know that you've got money there to cover your food and just keep you alive for the month. A little bit of money to socialize with, and it's all in different accounts. But as I said, I think I was talking to somebody recently, and I think they had like 17 accounts, which he said, "Oh yeah, that's good. I've overdone it." I'm like, actually, no, I'm thinking I might do the same. It's really good, but it takes again. This is all.
It takes away the thinking. It takes away the working
always
out.
check it. Yeah. Always check it. I think this is so. I actually got caught up in this fairly recently, a couple of years ago. Sometimes things just don't work, and one of my direct debits in my bills account just didn't work for some reason, and I didn't check it. Therefore, it went down as a missed payment. Mm-hmm. So even when you know as much as we do and stuff, you can still make these errors, but you have to learn from them and sort it out. And now, I about 3 or 4 times during the week, during the month, I check my bills account just to make sure everything's ticking over, and then I do the same with all the other accounts as well. And like you say, it just takes away the thought process a little bit. And I think that also then takes away the anxiety of it all as well, because you know that you have money and because you can see it and you know that that's covered and that's covered and that's covered. Obviously, problems will arise where you're looking at those and going, well, actually, what's coming in doesn't cover what's going out. And then obviously there are things that you can do to try and sort those things out that we mentioned. But yeah, I think just creating that kind of structure, that for me is like the fundamental base layer of personal money management. And if you 100%. Can do that, you're probably in like the top 1% of the country.
Yeah. 100%.
There's very, very few people that are actually doing it to that level.
Yeah.
And everyone should be doing it to that level.
100%. It's all about the basics and the fundamentals at the end of the day. Mm-hmm. So this has been really, really great, Sam. How do people actually find you across socials? Yeah,
so I'm pretty much the same handle across everything at the Sam Norris, THE Sam Norris, because Sam Norris was taken, so I had to just add the at the beginning. I DM me on any platform: Instagram, TikTok, LinkedIn, Facebook. Follow me on YouTube. I've got a good YouTube channel with lots of tips on mortgages and finance and personal finance. And of course, I also have my own podcast, the Game of Loans podcast, which can be found on any platform. So just type that in.
It's a nice turn of phrase, Game of Loans. I like that a lot.
Well, do you know, believe it or not, my hair used to be a lot longer and people used to think I looked like Jon Snow.
Oh, right, okay.
So
that's where it came from.
So it sort of came from, I'm a massive Game of Thrones fan, and then it literally popped into my head one day. And I was thinking, I need to steal that really quickly. And
you probably need to trademark it as well.
I really do need to trademark it.
You do need to trademark it.
I really do need to trademark it. Yeah, but no, thanks for the chat, mate. Always a pleasure sitting down with you.
And we need to look at a YouTube live or something like that as well.
100%. Yeah, we'll do that.
Cool. All right, guys. So there you go. That's the episode for this week. If you did find this interesting, please do let me know. We can invite Sam back on. Comments in the comment section on YouTube. I will put all of the links for Sam in the comment section and in the show notes for the podcast if you listen to this audio-wise. But as always, just remember, money's a tool, life is for living. It's all about the choices that we make. It's all about being smart and, making sure that we're covering some of the basics that we've spoken about here today as well. And if you haven't pre-ordered your book already, my book, that is, please go do so on Amazon. The link for that is, again, in the show notes and in the description if you're watching on YouTube. Catch you later on.